Hi dear traders! The US inflation data revealed mixed content, arousing a strong market response and high volatility. A minor slowdown in headline inflation was an eye-opener for market participants. Stock investors expressed their disappointment by selling stocks while the US dollar regained earlier losses. The red-hot inflation data will certainly influence policy decisions which the US Fed will make at the meeting on September 2021. Investors take another aggressive rate hike for granted. Some market participants do not rule out a jump rate hike by 100 basis points, not by 75 as initially expected. Nevertheless, let me remind you about one more economic report that will be published in the coming days. It will provide an accurate picture of the US current economic conditions. Let's discuss it in our video calendar. I will also unveil some important information. For a start, you are certainly aware that the Reserve Bank of Australia raised the key interest rate by 50 basis points last week in an effort to push soaring inflation down to the annual rate of 2–3%, acceptable for the Australian economy. At the same time, the board confirmed their commitment to do everything in their power to tame headline inflation. However, traders detected for the first time a hint that the regulator might hit the pause button on the cycle of monetary tightening, which proves the central bank's concern over global recession risks and new COVID restrictions in China, Australia's key trade partner. Traders could be discouraged about the indication of a dovish shift in the Reserve Bank of Australia rhetoric, but the negative could be offset by the data on Australia's labour market, which will be released at the same time as the central bank's bulletin. The forecast is optimistic. The domestic economy is expected to add 35,000 jobs in July. Employment went down in July due to some temporary headwinds such as flood in New South Wales, the winter vacation in schools and the COVID resurgence. Analysts project robust hiring in August. The U.S. Labor Department will provide a weekly update on unemployment claims, which could reveal a positive trend. However, this information will be of secondary importance to traders during the New York session on Thursday. Investors are going to digest the key metric of U.S. economic conditions. Importantly, also 2/3 of the U.S. GDP is generated by consumer spending, so a change in retail sales will shed light on the further dynamic of the national economic output. Judging by the forecast, stagnation in consumption accompanied by elevated consumer prices is likely to push the economy into recession. Such prospects are bearish for Wall Street indices. Another report of crucial importance for the global economic trends will be published on Friday, September 16. Traders will get to know the data on China's industrial production. The consensus suggests a flat annual growth, which confirms a fragile economic recovery in China on the back of COVID restrictions reimposed due to rising coronavirus rates. Such news will weaken the Australian dollar as the currency of the major commodity supplier to China's industry. One more high-impact report will be on tap on Friday. This trading week, the UK has been releasing a series of macroeconomic data. On Friday, market participants will find out about the consumption activity in the UK. Analysts suppose that retail sales in Great Britain escalated a decline to -3.4% in August on year. It will be another bad omen that the UK economy is slipping into recession. The Bank of England predicts the recession for at least 5 quarters ahead as the downside of aggressive monetary policy pursued by the central bank in an effort to stem inflation. The data on the UK inflation for August is available later today. We will certainly tell you about the market response to the data in our regular videos on the InstaForex TV channel. Subscribe to our channel and keep close tabs on developments in financial markets. See you!